All right, what's up, guys? Welcome back to another episode of the Living the Dream podcast. Today on the show, we have Patrick Grimes, who is the founder and CEO of investonmainstreet.com and the founder of Passive Investing Mastery. Patrick, how you doing?
I'm well, Timmy. A title after my own heart. I'm excited about participating in your podcast today.
Of course, man, we're excited to have you, and we like to jump right in. So if you could start with just telling us a little bit more about yourself and what you like to do for fun, that'd be great.
Yeah, so my name is Patrick Grimes. We private equity firm founder that provides alternative investments to accredited investors outside the stock market. I used to do engineering for fun, and I moved on to real estate and alternative investments and adventure sports. So actually in Hawaii right now, I do surfing, kite surfing, spearfishing. I've traveled I don't know, about an eighth quarter of the world's countries at this point. A lot of trekking, climbing. Uh, Big fan of traveling.
Okay. There we go. There we go. And tell us a little bit more about the alternative investments. Are you like syndicating apartments specifically? Do you have a slew of alternative investments you're offering? Tell us a little bit more.
Well, it started out with a new pre-development back in 2007. Was a little more speculative, lost it all, kind of came back doing single family, buy in recession resilient markets, renovate, rent out, and continue refi and do it again. That worked
Bird.
really well. Yeah, I didn't know what Burr was, and apparently that's what I was doing.
You're a smart guy.
And yeah, after a while, I realized I was moonlighting all that with my engineering career, and then traded up to larger apartments. So now we have about 500 million, a little under 5,000 units we've acquired with partners around the United States, and mostly landlord-friendly places where everybody's moving to. And our company's expanded into alternative investments. We have a couple diversified energy funds that provide for completely different cash flow and appreciation play on a different cycle than real estate. It helps to balance out your portfolio, even better tax advantages. And we have a recessionary acquisitions fund right now. So picking up some really great deals from individuals that aren't so fortunate today, like I wasn't back in 2007 and 8, 9, and 10. I'm excited to be on the other side of it this go around.
Yeah, I gotcha. I gotcha. And that recessionary acquisitions fund, is it targeting a specific type of property? Or are you doing single family, multifamily, self-storage, all of the above?
Yeah, so what we're seeing right now is in the mid-sized commercial space, a ton of single owner opportunities in a combination of triple net, medium-sized multifamily, some retail. We've seen a couple other things like laundromats and mobile home parks. And we've even seen a harbor where we can jump in there. And it's a little bit like whack-a-mole. We find these opportunities. We have a pretty sophisticated engine that scours around using some pretty sophisticated tools to find opportunities. And they tend to fall out in a range of different assets. We've so far focused mostly on medium-sized multifamily and triple net and retail, but we're seeing some others. And in the case that we can get in there and we can before we finish the acquisition and our earnest money goes hard, in the case that we know we can get our money out in about a year or less, usually around 6 months, we'll pounce and we'll jump in there. And the goal is not for long-term holds, because that's when people really scrutinize the asset class. And over the long term, is it easy to manage? Is it the best asset class? Well, no, we're making money on the buy. We're not making the money on long-term value add appreciation strategies. So the calculus changes a bit when the goal is to buy right and then do it trade forward to another acquisition that you bought right and then trade it forward again. And through agility and speed, we can capture as many of the good deals that we're seeing today while we see them, and get some really exciting returns and yield. It does cash flow, but mostly we're looking at pretty exciting yield appreciation in these assets.
I gotcha. And so you guys aren't just cold calling or sending out direct mail to find these properties. You have like some proprietary tech that helps you identify and execute.
Yeah. There's very, very unique ways to find. Everybody says they have their secret sauce. Well, we have our secret sauce, but I think is more unique than I've been seeing something quite like our acquisition engine, our how we find our property since I've been in the space since 2007. It's the first time I've seen us approach finding properties. It's still the same old process once you found them, right? Of
Yeah.
negotiating with owners that have some kind of distress in their lives. We're not buying run down distressed assets. We're finding motivated individuals that want to exit quick,
Yeah.
and we provide that kind of relief, right, to get out. And so that's our journey right now, and we're very creative on finding them, and we're very relational on closing.
I gotcha. So what kind of yield do people expect when they're looking at these different funds and opportunities when they come to invest with you?
So we have 4 acquisitions we've done outside the fund. And the reason why we did that is kind of test, can we find these assets and can we do it at scale? Can we execute on them? Uh, and to justify putting them in a fund. And so far, we've been killing it. We've gotten over about a 2 equity multiple in our timeline of about a year per property on average. So,
You
and we've
doubled
been
your money in a year on four
for on
deals?
average over the 4 acquisitions so far. Uh, Now, our projections are not like that, but that's just what we've done
Yeah,
so far.
yeah, yeah,
Now, our projections within the fund, and what's exciting about putting it into a fund is you can move faster because you got the capital in the fund,
yeah.
and it's easier to participate in a 1031 exchange. So once you've acquired a property, you bought it right, and you want to immediately do a tax advantage trade into another one, within the fund, we can have that agility and efficiency to pounce on the next one, right? And then pounce on the next one. Now we are projecting, a pretty hefty return above a 20 or 30% annualized return. We feel very comfortable with that because of our track record, which is, it's superseded that. So,
Yeah.
but being able to do it at scale and being able to once, 1 or 2 assets become 2 and then 4 and then 8 and then 16 because you keep compounding, that's when that diversification gets really exciting and the returns can continue to multiply.
That is really exciting. Well, that's really cool, man. Tell us a bit more about your motivation. What really gets you up and keeps you going every day?
Well, I started out as a mechanical engineer, just working hard like many of your listeners as a professional. And, I bought into the climb the ladder and slave away and they'll take care of me.
Yeah.
Not the case, really. And so, we're in Hawaii for the summer. Things are very different. We have worked our way into freedom that I couldn't have dreamed of having back then. I got some advice early on to that the way to have more stability in your future is to not put it all in the 401k and IRA plans and not listen to the financial planners that put them in similar plans and not buy into the whole kind of fallacy of the American dream to work until you die, focus on your job, but to be more deliberate and focus on your investments and be the chief financial investor of your life. And so I kind of took that seriously. So I I got real interested. I'm a tinker. I'm a designer, mechanical engineer. I got a master's in engineering and business. I love figuring things out. So I got real passionate about just learning how the financial space works, about learning how to get in and do deals and find and stabilize. And I had a lot of fun with it. I promise I was like moonlighting it for a lot of years. So it was a slaving. It was like getting a third master's degree for me.
Yeah.
But and now once I got through the single family log, I met my soon to be wife. My why changed. In fact, she was there for my last closing. And I told her, I was like, look, I want to create a life where I don't have to trade my time away from my family, friends, and hobbies, where I can lean into my family, friends, and hobbies and be wise about my investment decisions and work my way out of a day job and get us the freedom that we want. And so that became my why. And so we spent a couple years after getting married learning how, to do investments more passively and trading up. It took me a couple more years to get free of the day job. And now we have a family and we got a little one. I've got a 7-month-old boy and we're having a great time with it. And looking forward to having the luxury of spending some time with him now as opposed to working for the man.
Yeah. I got you, man. Dang. So there was a grind period there where you were like working a job, you were moonlighting the single family kind of grind, and then you made the shift once you got married and you started learning about kind of how to scale up. I guess my question is, when you were scaling up, were you selling your single family properties and 1031ing into bigger properties, or did you start raising capital out the gate before you were trading up? Does that make sense?
Yeah, so I've sold a handful of the properties. I've still got a couple of them, and turns out they're more effort. The single families are more effort to sell than they are just to hold because it's easier. When I did my first multifamily was an 86 unit that I did with my partner Robert, and it took. I say that it took me about 2.5 single family time period to do one 86 unit.
Hmm.
So
Yep.
it became obvious that just even offloading the single families was more effort than it was to just keep pursuing larger multifamilies. And
Yep.
so the intent was to begin to trade up, and I did. I sold some, and I traded those into equity into larger apartment buildings, and similarly into diversified energy funds. As you know, and the reality is, I'm not necessarily a real estate guy. I'm more of an alternative investor that is looking for things outside of the stock market that believes in diversification. And even since my first website, I put my passive investor guide, which is a free download. It's had a graph that showed the the middle class versus the high income versus the ultra wealthy, and how the middle class is 8% of their income in alternative investments, not stocks and bonds and savings,
Yeah.
and the high income have 25% of their wealth in alternative investments, and the wealthy have 50%. That's not
Mm.
all. That's 50% in private equity, real estate, energy, all these things. And so where do you find these things? Well, your financial planner is not going to provide those to you. No real asset. They're going to provide you what looks like it's fake. It's a REIT. I've got whole articles and forums about how terrible REITs are
Yeah.
because they're just right. They're not real assets with tax advantage. That it's paper, sentiment driven. And so you have to find elsewhere. And so I believe in those alternative investments. And that's why when you look at our portfolio, we got a combination of real estate, kind of energy. We're looking at both debt right now going into the recession. We have the alternate, we have the recessionary acquisition fund, which can buy equity into downturn assets. And then we have coming up in the future a debt fund, which provides relief on the debt side for people that don't want to sell, that maybe we can bridge them to hang on to it. And so by playing both of those, we believe that's going to help you ride the waves in of this recession, even as the tide recedes. And I think that's where I wasn't in 2009 and 10 when I lost it all and I was grinding it through and it was embarrassing and humiliating. Um, but that gives me the chance to offer to, my investors, hey, make sure what exposure do you have to harness the upside of this downturn? Well, let's work on that together. That's perhaps the most exciting thing that'll happen right now in the next 20 years. So let's do it.
Yeah. Well, cool, man. Tell us about passive investing mastery. What's that all about?
Yeah, so invest on Main Street's been kind of a passion that kind of grew, like I said, out of the single family and then the private equity into multi. So we've taken down a lot of multifamily. Invest on Main Street's been very focused on that. There's some energy deals, but we're moving into much more alternative investments, and which I've got a bunch of them, kind of non-correlated ones that don't rise and fall together,
Hmm.
and we've got a bunch of them that we're analyzing and in the pipeline right now, and we want to be able to kind of expand and build an educational webinar series, a podcast, and begin to provide alternative investments that are for people coming from a place that are open-minded to completely different things. And we found that some of the most stable income producing investments weren't real estate. They weren't energy, they were other types of investments that. And so a forum like Passive Investing Mastery gives me the chance to just get in on there and talk to people about all kinds of different things. And it's a bit of a passion for me now. My wife and I, we don't have to be doing anything, right now. Um, at any particular location on the planet. We can just ride it out. But we're doing what we love to do. And what I love to do is kind of give back and do education. And I think that passive investing mastery is a perfect place to do that and a perfect location to put some alternative investments that can really help diversify and build a better foundation for our investors.
Yeah, I gotcha. And so I'm curious, are you passive investing mastery? Is it primarily for that person who's already accredited, or would you suggest that people who are also, maybe they're where you were in like '05 or something, or '04 when you were just working the W-2 job and you weren't accredited yet, you didn't have a bunch of money saved up. Is this also for that person or mainly for the people who like already have that high income W-2, or maybe they own a business and they've done well and they're looking to put some money somewhere?
Yeah, well, so it's going to be a catch 22 to me because all the individuals that you're going to have on your show that are like, oh, we're doing investments and this is what they are. Well, those people, by definition, are filing with the Securities and Exchange Commission as the Reg D 506C, meaning they can talk about their investments on open forums.
Yep.
And in order to do that, you can only allow accredited investors.
Mm,
It kind of sucks. I'd love to be able to take in some non-accredited investors, but for me, very few people even know about what we do. And if I was doing investments that only allowed for non-accredited investors, I wouldn't be able to get out there. And so what it takes people like me to get out there and talk about, hey, even if you're not accredited, set up a call. I have colleagues that, and some people that think they're not accredited, it turns out there's ways and they don't realize they're adding up things right, or be income or net worth, and it looks like they may pass a law that allows a test to be passed. Actually, this is new information, but right now there's legislation that would allow the FINRA to create a test to allow yourself to be accredited. And that could
oh,
potentially be coming up within the next year. Yeah, they have 180 days. If it passes 180 days to create a test, another 180 days to implement it. And so within next year, you may even be able to take a test. But it takes people like me to get out there that are doing accredited investor only deals in order to get the word out that they exist. But I'll tell you what, if you set up a call with me, investonmainstreet.com, happy to have a chat, get you pointed in the right direction. I know individuals that unfortunately can't get on podcasts, talk about their deals, and that are doing a great job at providing investments in my space, but they're doing it purely from pre-existing substantive near relationships. So you got to get in, you got to meet them before they have an offering.
yeah.
Happy to help out there. But ever since I started coming from the high tech space, I've always done accredited investors only, and I've only ever done 100,000 minimums for my investments, and we've done pretty well, right? Just in the last few years, we've raised over $60 million. We've got over $500 million in holdings right now, and we've done a great job of getting in there and really helping to diversify out our investors' wealth and provide a portfolio that they don't live in fear with. They don't wake up every morning frightened of the fear mongering on the news about the stock market volatility, because they have an anchor. They have investments in other markets that are not all on the same cycle.
Yeah, I gotcha. I guess a question I have is, you said you've raised 60 million with 500 million under management. Is that right?
Just in the last couple of years, I think this over the last push in the last couple of years, about 60 million. Yeah.
Okay, raising 60 million, that's a lot of money. And so I guess my
Mhm.
question is jumping on podcasts the main way that you meet these investors? Or are you out networking, are you cold calling, you like where does this how do people do this? I guess if you can speak to that.
Yeah. Well, it's interesting you say that because I am not a guy that naturally gets out on podcasts. I'm a mechanical engineer that was tinkering with Legos, building erector sets growing up, and raised in the mountains. And then I went to college and I was a keep my head close to the grinding wheel mechanical design engineer growing up and through my professional career. Got a master's in engineering and a business and an MBA. And still, then when I started doing real estate, it was all on my own. And then I kind of transitioned to private equity, and I had to get out there.
Yeah.
I had to start, and I was fortunate to do very well in my high tech career. So there was a lot of individuals who had invested millions of dollars with me in more risky innovation projects, automated manufacturing solutions. And I played a role in helping to craft those and architect kind of those solutions with the design engineers and the manufacturing people, and did robotics technology for that. And a lot of really cool innovative stuff for like Apple, Tesla. We did a lot of COVID test kit stuff and a lot of really fun projects. So I was fortunate to have some connections in that space to kind of get me started. And I kind of treated it like a business. Friends and family, hey, come help me. I said, no, this is a sophisticated private equity firm. We're taking down very large investments right off the bat. And here's where I'm headed. And that worked. Now, that worked for a minute, but as a lot of individuals know, your near network oftentimes can subside.
Yeah.
And it takes a realize you've got to scale, and you've got to do that through getting your name out. And I went to a real estate guy's event, and I talked to
Real
Russell
estate guy.
Gray.
Yeah.
Yeah, and Russell Gray, he helps. And I was living in Hawaii at the time. Actually, we were this place here we're in right now, and I flew like red eye all the way out to Texas, and to attend this. And I kind of explained to him, I've done really well. I've got a couple hundred units in multifamily, raised, 10, $20 million. I was like, but how do I really scale it from here? And he asked me all these things. What are you doing? And I was like, I'm not doing any of that. So I'm not doing podcasts. I haven't written a book. I haven't spoken on stages. I hadn't done anything. I was just through network, friends and family, um, and conversations one-on-one. And that's just my personality. And he said, well, it's time to get your story out there. And so I got a book out, and I'm happy to offer a free copy to your, we ship a signed copy to help contribute back to people that are wanting to move forward in their lives. It tells my whole story. It was a bestseller on Amazon. I did it with a handful of other people and really cool people. I had Phil Collins, Def Leppard's on there. You've got NBA, NFL players, really fun. So that was an Amazon #1 bestseller. I got my first time getting my book out, getting my story out in a book. And then I started talking on, I was invited even a year earlier to write Forbes, and I turned that down. I was too busy doing deals, head to the grinding wheel. And kind of then I then I reapproached them. And the funny story is when I reapproached them, they were like, oh, we've denied your member. I was like, wait a minute, you asked me first. And I don't remember exactly how it played out, but I was like, hey, look, I'm ready to they're like, actually, we don't think that you're a good fit. And I'm like, well, wait a minute, you asked me, what's the deal? And apparently they thought that I was all single family investor and not commercial. And
Oh,
because they reached out initially, somebody else was in charge. And then when I said I'm commercial, and they were like, oh, yeah, we need this. So now I've written half dozen articles in Forbes, got my name out there. I've done about 60 podcasts, individuals like yourself, that where there's a good living the dream. I love it. Where there's a good resonating sense. I have a book coming out. I'm actually reviewing the chapter right now for a book that's going to be submitted to the Wall Street Journal, that I'm excited about later this year. And I'm actually working on a TED Talk at present, and I'm hoping to make my goal is to actually have it ready to do sometime this year. So that trying to, and then I speak on stages now, either probably every 2 months, and maybe a virtual one, 1 or 2 a month. So I think getting my name out there is really what ultimately, and there's also a sense of momentum where once you kind of grind it forward, you get your first deal done, and then you do well. Like we had a 70 IRR in our first deal. Not only do those individuals move to a 1031 exchange, keep their money in, and we just trade them to the next property, all but a couple. And then, but they add more to it, and then they tell their friends, right? And then you can say, you begin to build a track record, and you get momentum. And so when you get that momentum, and you're consistent, and you communicate well, and you're intelligent, you just gotta keep after it, and it'll work out for you.
yeah, absolutely. So it is like some of the branding, the getting the name out there, but you had an initial core, and doing well with that core, it just kind of naturally grew by word of mouth.
Mm-hmm.
Solid. All right, man. Tell us a little bit more about your dreams and goals. So your vision for your life, your business, and vision for the people who are following you, who are like looking at investonmainstreet.com and in the passive investing mastery, what's your vision for all of that?
Well, first of all, on a personal side, my vision is to be the best father I can be to my new youngster here. I waited later in life to have kids, and I'm excited about being able to devote so much time that I otherwise wouldn't have had.
Yeah.
And so I'm really excited about that. But what is my vision right now? It plays into the conversation that I'm having with the book that we're submitting to the Wall Street Journal as well as the TED Talk, and that's that many of your listeners are living in fear, and they realize it, but they don't know what to do about it. Why? Because it's natural. They live in fear because they wake up in the morning and they watch the news and they see looming reports of recessions, the dollar, inflation. They worry about their retirement accounts. They worry about their job and their only income stream. And isn't it the fact that if you do live in fear in those ways, then you don't have that sense of security and financial stability? And Maslow, his hierarchy of needs, the very foundational need, right, is safety and security, right, and shelter. And if you're worried about losing your job, losing your only income stream on a daily basis because all of your investments are kind of all up in one cyclic market that the fear mongering affects, right? And you only have one income stream, then how can you ever achieve full realization, full enlightenment? How can you ever climb to the very most basic levels of self esteem in order to live your best life? And so I think that my journey is to kind of pull back the veil a little bit of the fallacy, that American dream, that putting it all, working so hard at your job and not identifying as your own investment manager of your life and not identifying as the chief investment manager of your family's future. I think that is where America has failed us, because they're saying, be a doctor, be an engineer, be an architect. Like I was an engineer, or be a lawyer, and that's what you do, and then pass everything else off, and we're not going to educate you, we're not going to do it, you pass it off to somebody else. Well, all of those people, those financial planners, those employers, are going to put you in these things that have you perpetuate this fear. So my journey in life right now is to kind of not only kind of unveil that, where I was and when I lost it all, and the fear that people live in. And I've worked in some of the coolest places on the planet doing contract work and machine design with some of the most intelligent people in aerospace, medical device, EV vehicles, all over the place. And those same people that are brilliant are all having this sense of uneasiness. And that is something that's fixable.
Yeah.
That's something that's fixable by learning and embracing that investment manager inside of you, that chief investment manager of your family's future, taking passive steps like listening to your podcast, listening to some audiobooks and other things that help to kind of provide some basic investment knowledge, and then taking active steps to diversify, where now you don't just have one income stream. Now you're diversified out of the sentiment stock market. Maybe you're in maybe within the next couple of years, you'll be in 6 to 10 different alternative investments, all of them which have tax advantages and or ride different market cycles, so that at any time, you don't even need to turn on the news, because you know that even if the market collapses, you have anchored your foundation in more than one location. And when I got to that point where I felt like, you know what, I'm cool. I'm all right. We're going to be fine. I've mapped out my future. We've diversified where we're at. And now we have a true sense of peace. That's what I would like to give back. And that's where I want to take people. And that's what my wife and I, we get to do now. And we get to do it from Hawaii. We're here,
Yeah.
so I'm doing it from my lanai right now with Waikiki in the foreground. You probably see it in the reflection.
Yeah. No, absolutely, man. I love that. Addressing that fear and identifying that that fear is fixable first. Like a lot of people feel helpless. And so I like that
Mhm.
you're touching on the fact that, yes, you may feel scared right now. Yes, you may feel uneasy about the lack of control, but identify yourself as the person who has control over those investments and realize that the fear, the uneasiness, the anxiety around your financial situation, high earner or not, like that's a fixable issue. You don't have to suffer in that way. I like that you're really hitting at that with the book and with the opportunities that you're presenting people.
And the coolest part about it is becoming an intelligent investment manager of your future. And, I like to say chief investment officer of your family's future. That's where I like to ground that, because that gets people closer to their why
Yeah.
and empowers them. But that's so much easier than becoming an engineer. I mean, just learn the process that I took to learn how to do this was not more difficult than getting through electromagnetic and static physics class. And I'm sure it wasn't more difficult than passing the bar or becoming a resident doctor, in 12 years. And my sister's a PhD professor, and man, she works so hard. She works way harder than a lot of the investment people that I know. But they just haven't taken the time to allocate a piece of their time to build the safety and financial security. And the beauty is it's much easier than people think. It just requires you to identify and empower yourself and to make that shift of the
Yeah.
who you are away from identifying with Pat the engineer like I did for decades to something that actually serves you and your family.
So I think a lot of the stuff that might hold people back from taking that leap, becoming that chief investment officer is risk. Like I come across it with my friends all the time when I try to talk about money stuff or isn't that risky? And so what do you say to the people who are like, yeah, but a financial advisor knows what they're doing. It's way less risky to invest with a financial advisor and just not worry about my money.
Well, unfortunately, the financial advisor, the education, Google what it takes to become a financial advisor. It takes like 120 hours or something like that to pass your
Yep.
series test to become a financial advisor. And the what you got to look at quality of life, right? Um, the reality is no, it's far more risky to be in one index, to be in one sentiment driven stock market. And that's all of your 401k, most everybody's IRA, and almost everything a financial advisor will put you in. And being in that in its entirety, if you look at over time, not only puts you in this major cyclic fear loop that you live in your whole life, but it also puts you in a situation where you'll never get out of it. You will have a hard time trading time away from your family and friends and hobbies your whole life to try and continue to build up these accounts, only to not be able to retire when you want, and then dwindle it all down to try and not live as long as you want, so that you're not a burden to your family and not leave something down to your children. And that right there, the fear that people live in, the risk that all those happen is high if you go that path, the traditional, conventional path. That's a high probability. And most Americans travel that. That is a risk. Whereas if you begin to invest outside of these things, it's far lower risk. And that's where you see the high income and ultra wealthy and 25 to 50% of their wealth, not all of it, but 25 to 50% of their wealth into alternative investments.
Yeah.
And that would be the less risky path. And things that seem like I'm not going to go do brain surgery. I'm not even going to go try and fix my engine, right?
Yep.
That would be risky if I were to go do that. But there are lots of mechanics. You don't know who they are yet, but you got to go to Yelp to find them and to find the good ones. Now,
Yep.
you spent more time searching for better mechanics or searching for a better dentist, right? Because you want to get your car fixed, your teeth. You haven't spent that amount of time to go find a different investment manager that invests in alternative investments like our company, to listen to their investors' testimonies, to look at their track record, to take care of the wealth that's going to take care of you in your future.
Yeah, I love that. So if you could just give us a refresher of all of the alternative investments that you guys kind of look at. I know we've talked about real estate, we've talked about some diversified energy, but are there other ones that you want to mention for us right now, or do we want to keep it there?
Yeah, so right now we have about a half a dozen that we're doing due diligence on and that we're investigating, and I'm hesitant to bring them up. But as we said, we have the equity side for larger multifamily recession resilient assets, right?
Mhm.
We have natural gas and oil drilling, right? Diversified energy funds. We've got a couple of those. We have the recessionary acquisition fund, which diversifies you across the growth markets, the landlord friendly markets, in multiple different assets. in triple net retail, as well as mid-sized commercial, multifamily, and a couple others. And that's on the equity side where you get to be a part of the ownership. And then after that, in fact, we're launching that right now, and I'd recommend everybody jump on it. We've got an overwhelming response. A lot of people really want to jump on how to win from this downturn right now because they see the rest of their portfolio tide going out. So if you want to ride that wave in, it's appropriate analogy because I'm looking at Waikiki Beach and there's 1,000 surfers trying to ride the same wave in right now in front of me. So if you want to ride that wave in like these guys and try not to bang into each other on the way, give me a call and we can have that conversation. Now on the equity side, where we're going to literally buy these outright, buy these recession assets outright. That's a strong play for people that are like, you know what, I'm out. Not bad assets, not bad buildings, but operators are like, look, I'm done. But we have a subsequent one that's on the debt side that's going to be able to take those assets and individuals say, look, I want another shot. I want to keep this going. I just need some temporary financing to make this happen where we can get advantageous short-term notes where we're in a first position. If they succeed, that's great, right? And we make our returns. If they don't succeed, well, we exceed our returns because now we own the building and we can then take that building and then turn it around. And so those are the next two. Well, I haven't talked a lot about the next one before, but a preview of this next asset, we're doing a lot of due diligence on it, is on the medical side, which is most recession resilient industry. And it's detached from actually providing medical buildings or providing medical services. It has to do with after the service was provided and between the lag time between the insurance carriers paying out for that. Some of the medical suppliers that have been around for decades, they want to sell that. They say, look, the insurance carrier owes me this amount of money. It's going to take 6 months to a year for them to pay out. I'm going to sell it to you at a discount, and then you can then collect that in 6 months from now. And it's amazing how that is such a big business, and it's very low risk because we can do due diligence on the insurer, on the medical provider, very well established, longtime A players, and we're essentially just providing short-term bridge income for the medical provider while we buy that, and then we just wait to collect the full claim in the subsequent, call it 3 to 9 months, depending upon the claim. Huge returns. And in times like COVID, we actually saw the demand for that even go up. Very recession resilient. So it is a niche, and it's one of those completely different alternative assets that will help to provide double-digit cash flow to somebody and have a completely different market cycle unattached to anything else. And it's those kind of like beautiful gems that we're looking to launch and provide as diversification plays.
That's a really cool niche. I have never heard about that. And I like to kind of keep my ear down to hear about alternative investment strategies. So, man, that's exciting. I'm glad you came on the show and you got to share some of this stuff and that I'll be able to follow your company. Yeah, that's some really cool stuff. Well, any other dreams or goals that you want to chat about? We're coming to the close of the podcast here pretty soon, time wise. And so right now we got Be the Best Father. You can be to your new youngster, help people to stop living in fear and start identifying themselves as the chief investment officer of their family's life. Any other dreams or goals that you want to put on here?
Well, I am buying a surfboard and I'm learning to surf out there. My wife and I love to travel, so we're going to do a lot of traveling coming up. And that's about it. I think I'm right now just focused on my family. That's my big one. I spend a lot of time working hard and focusing on my career and my investment future. Now I get to focus closer to home and spend my time kind of giving back to the investors that I work with.
I love it. I love it. And we're going to skip a couple of these. If there were one or two people you could meet right now, and this could be a specific person or a type of person, and they'd really help you take that next step towards accomplishing all these dreams and goals, moving further along in them, who would that person be and how would they help you?
Well, I've got to say Elon Musk, because I just find him the engineer and the high tech guy inside of me, having been in robotics. And I actually did some robotics automation systems, helped design the robotic assembly system for the rotating part of the motor, the Tesla motor, which is super cool and a lot of fun. Did some work in SpaceX as well. I definitely want to sit down and have a conversation with him about AI, which is one of the coolest. I mean, we're using AI. In fact, almost all the meetings we have now, it's how can you do what you're doing more efficiently with AI is constantly our theme, and we're using it in various ways right now, and we're testing a lot of stuff. But I'd love to sit down with him, map out what we're doing and the things we have coming up, and then get his take on, because he has such a high level of technology awareness and the advancements of it. I'd love and just pick his brain. What makes him tick.
Yeah. Yeah, absolutely. All right, we got two more and then we're gonna wrap this thing up. What's your favorite book, movie, or podcast? Pick one of those three.
So the most recent, because I do a lot of podcasts, the most recent book that I read uh, was a CEO does these three things by Trey Taylor. He's an awesome guy, and I knew him before he put out the book. He's a family office, done some investing with me, and so impressed by him and what I've seen. And then when the book came out, it just has been he's just been all around the country presenting it at a place like MAT and John Hopkins, and he's just doing such a great job. The book is something that if you're serious about running a business, you should probably read that book 5 times.
Mm,
It is so packed full of great anecdotal examples of powerful leaders and how to run and hire, build a culture of a business to make it really that built to last place where it's awesome to work at. I'm very impressed. I think everybody should pick that one up.
I love it. I'll have to add that to my list. I haven't haven't ever heard of it actually. So there we go.
We'll have him on the podcast. He'll tell you all about it.
There we go. Yeah. Yeah, I'll reach out. And what is one action step that you can take right now or continue to take if you're already doing it to meet and work with Elon Musk?
Oh, me to meet and work with Elon Musk?
Yeah, how could you do it?
Well, I'd probably reach out to some of my partners that are individuals that I used to work with at SpaceX or Tesla, and see if I could make my way in through the engineering side. Otherwise, I'm not exactly sure at this point how you would chip your way into that sphere.
Yeah. Yeah, no, I think that's a good in right there. You got a more solid one than most people. Well, awesome. Patrick, is there anything else that you want to chat about before we sign off?
Yeah, so if anybody's interested in my story and learning a little bit about kind of what makes me tick, the journey, the pivots, and the persistence it took for me to go from day job to losing it all to getting it back to finally making it in real estate private equity and building alternative investments. I have a book, and I'd be happy to send a signed hard copy out to whomever is interested. We have a website you can go to. It's investonmainstreet.com, invest on main and then street.com. If you go to /book, that's the secret link. And just put in the name of the podcast and as a promo code, and we'll get that off to you. If you want to set up a call, please do. Love to chat with you. It's part of what I love to do is talk with investors, get you pointed in the right direction. And we do have a wait list right now on the website for our new recessionary acquisitions fund. Highly recommend putting your information in there. And when we open up new investments, looks like we're already almost subscribed for the first tranche, even though we haven't really launched that tranche yet, just in the wait list. So make sure you get in the priority queue there, and we'll keep you in line for when we have more equity available on them.
Sounds good. Well, there you go. Patrick, thanks for coming on the show.
I'm glad we did it, Timmy. Thanks so much.
Of course, and if you guys are listening to this and you loved what Patrick had to say, he just gave you a ton of ways to reach out to him, and all of them will be down in the show notes. Thank you guys for watching. We will see you on the next one. And on that note, we're out.